This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September 25th, 2014. Since we last spoke to you, Scotland ended up staying in the UK, which I guess is good for them because they wanted to stay. So they're staying. Also, food stamp enrollment in Illinois. We're constantly hearing how great things are in the United States. It outpaces, if you can believe this, food stamp enrollment outpaces job creation by 2 to 1.
Wow.
Billionaires are hoarding piles of cash. Billionaires are hoarding mountains of cash, offering the latest sign that the ultra-wealthy are nervous about putting more money into today's markets. Also in China, they have a Scotch indicator, and it's signaling disaster. The Scotch Whisky Association published its global figures for the first half of this year, and consumption is way down in China. Exports to Singapore and China dropped 46%, according to the organization. So you can see, obviously, it's a bad sign for the economy. Geopolitically, you had Israel shooting down a Syrian warplane after a fight over Golan. Also, 60 Minutes did a feature on Sunday, and they talked about ISIS. They also talked about this organization, the Khorasan, and they're a terrorist organization that actually is a bigger threat than ISIS. And we had the United States joining together with other countries from around the world trying to eradicate ISIS in Syria. Also, the World Bank saying Ebola is spreading and may have a catastrophic cost. The World Health Organization says 21,000 Ebola cases by November if no changes. Obviously, we're in very, very serious times. And one of the reasons, and I brought this back, Harold, before we get to you and your commentary, is I think it's so important to remember why we want to be in hard assets. And this is a quote from Rick Rule, and he's the president of Sprott USA. The long-term bets on gold and silver are pretty obvious. The alternative to gold is U.S. Treasuries, including the benchmark 10-year Treasury. The 10-year yields 2.7% in a currency that I strongly believe is depreciating at a rate of 5% compounded each year. That means the value proposition over the long term is that over 10 years, your purchasing power is diminishing by about 40%. That doesn't seem very attractive to me. It appears to me like the U.S. government is suggesting that if you give us $100,000, we absolutely promise we will give you back $60,000 in purchasing power 10 years from now. This is just one of the many reasons I personally prefer to own gold and silver in the short, intermediate, and long term. And obviously, Harold, we advocate diamonds as well.
Yeah, you better believe that, Randy. Again, I think what Rick Rule is saying, basically makes sense. The thing is about the U.S. dollar is that it's actually declined 95% over the past few decades. So, with the amount of printing of money, the U.S. dollar has to go down. However, obviously that seems to be a foolish statement because if you look at the charts right now or you look at the currency markets, which I follow daily, it shows that the U.S. dollar is one of the stronger currencies. I know this may sound crazy, but it isn't that speculators in the futures markets are buying the U.S. dollar. What they're doing is selling the foreign currency markets. It's got the same effect, but psychologically, if an investor is bullish on the U.S. dollar, he would buy futures contracts or buy options on the U.S. dollar. But that's not what's happening. What's happening is that speculators are buying puts or going short on the euro, the British pound, and all the other basket of foreign currencies that trade against the U.S. dollar. So again, the reason that gold has dropped as it has within the last 30 days, where it's dropped almost $60, 4.62%, and over the year so far, gold has dropped $111. So obviously this has not been a good year for gold, but either has the last 3 years. And basically, the reason that gold has dropped as much as it has, unfortunately, really has nothing to do with the gold market or the fundamentals of the gold market. It was made to happen, and that's the unfortunate thing. And a lot of people won't understand what I'm saying about that, but in 2011, when gold went, all the way, when we first recommended it from $250 to $1,920, it was because there was not enough physical gold and silver to back up the futures contracts and the outstanding ETF contracts. That's why they brought down the price of gold, and they've damaged the market so severely that the market has dropped, and a lot of speculators have gotten out of the market. Now, the fact is that today when the market's open, and we're taping the show on Thursday, gold was down to $1207.50. A few minutes later, gold is now up to $1224. We're up actually $7 on the day when we were down substantially this morning. Silver was down to $17.28. It's now back up to $17.72. And the fact is that the stock market is plummeting this morning, down to 173 points. That's the Dow. The Toronto Stock Exchange is now below 15,000. It's down 153 points this morning. The U.S. dollar is up by 16 points, but again, that has to do with the weakness in the foreign currency markets. So basically, almost everything is red. I'm a firm believer in owning hard assets, alternative assets. The fact is that I'm a Canadian living in the United States for the last 32 years, and I've been in this business for over 35 years. I've seen almost everything happen, and I am not concerned about my positions in gold. First of all, we don't leverage. I've always said to own the physical metal yourself. Own it, have it in your possession, take it home with you. The fact is that we're not trading in and out of gold. That's too difficult to do, especially with physical metal. We buy physical gold and silver. We buy alternative investments like diamonds and art and those type of assets because they bring something else to the table. They're not volatile. They're not traded on exchanges like gold and silver and stocks and bonds and everything like that, where you have buyers and sellers, with their own opinion on the market. These markets are totally different. To own physical gold and not to trade it is probably one of the most important things that you could do at this particular time. Geopolitically, the world is falling apart. There's frightening situations happening. The fact is that the U.S. economy, which appears to be strengthening, is not really strengthening. There's only a certain segment of that, and that's the very, very wealthy. The middle class and the poor are getting hammered in this market. They lost their jobs. The jobs are not paying what they used to pay. And if the middle class is not doing well, there's no economy that will ever do well without the middle class, because the middle class makes up most of the population. And if they're not spending, if they're scared or they have no money, there's no chance that the economy is going to get better. So how in the world is the Dow at over 17,000 if the economy is so bad? It's still that they're printing money, and it's still quantitative easing, not to the extent that it was, but they're petrified, and I mean petrified, to raise interest rates. Now they're put it off till the end of 2015. So the stock market looks at that as we got another year in order to make some serious money in stocks. So that's what the smart money or the big money is doing. Most people don't have big money anymore. Most of the general public is very tight. They're petrified of the stock market. The unfortunate thing is that the general public doesn't get involved when the market is, at its early stages of a run type of thing. They tend to get involved in the market with all the hoopla and all the excitement when the market is hitting, record levels, and then the general public jumps in, and that's when you see the smart money getting out of the market, the general public getting in, and that's when the market plummets. We don't want you to do that. There's no tremendous upside potential that matches the downside risk to the Dow Jones right now. The fact is that the Dow at any time could plummet. It could go back down to 10,000. It could go back lower than that, because really the economy in the United States, where it is better than parts of Europe, it is still in big, big trouble. I must admit that, the fact is the stock market has rallied based on quantitative easing and cheap interest rates type of thing, but that has nothing to do with the U.S. economy. The U.S. economy is in big trouble. We're going to war again. Just not a good situation. So I own gold, and I own physical silver and diamonds and art because those are non-volatile assets that hold their value. And let's face it, in these dangerous times, capital preservation is one of the most important things. We all want to make money. We want our money to work for us and put it, but it's way too risky right now. To put your money back into the stock market is way too risky. I'm looking at gold at this particular point is trading right now. It hit a low of 1207.50 and it's hit a high of 1224. So we've seen a $17 swing in the gold market alone today. We've seen similar type of moves in silver. My thinking is that there's very heavy support in gold at 1180. Is it possible that gold's going to get to 1180? Sure it is. It could easily get there. It could get there in the next month. Silver, very heavy support is at 1650, and the market hit a low of 1728. So we're not that far away from those numbers that we hit back in 2011 when they forced the gold and silver market down. So again, I'm thinking that we're getting very close to a bottom of this market. Obviously, as we get closer to 1180 in gold and 1650 in silver, we'll reanalyze. We'll see where the shorts are. We'll see how strong the market fundamentals are at that point. And we may recommend buying heavily back into gold and silver. We are going to do that within the very near future. In fact, I'm gearing up for that. I've been talking about this for the last month of us putting together physical gold purchases for our clients where you will be able to buy physical gold at no commissions and at spot prices. So basically, we're working on that. It's coming close, but we're not ready to buy yet. We're still sitting back and watching the market and seeing if it's going to come down and test that 1180 level in gold. All in all, I'm still a firm believer that the fundamentals in the marketplace and the geopolitical situations that are happening right now will eventually bring gold not only to the highs that we saw in 2011 of almost $2,000, but way beyond that. There's numbers of $5,000 and $10,000, and obviously because we've never hit those numbers before, those are hypothetical. However, we never hit 1,920 before either. The highest price we ever hit in gold was back in 1980 when it hit 850, and we actually more than doubled that price. So we've seen that happen. We've now seen 1920 as a high in gold and $50 in silver. We think that we are going to retest those levels again, and we believe we're going to go far beyond that because the world problems are so severe at this point. And again, the way that they're attacking it, I just don't believe it's going to work over the longer term. If I felt that the stock market was a viable place to have our money, I'd be in that market right now. I'd be in it for the last umpteen months, and I'd be recommending it to you. I don't feel that way in any way, shape, or form. I feel it's a dangerous market. I don't feel the stock market reflects how bad the U.S. economy is. And again, you've got a recession in Europe right now. Italy's in recession. Germany's in recession. France is next. France has got gigantic problems. Things are out of control in Europe. And what the feeling is that the recession in Europe is going to bring down the economy in the United States. And that's going to happen at almost any time. So now's the time to be very conservative. It's a time to get hard assets into your investment. And again, if you buy gold and silver, I don't make a penny on that. I'm not recommending that you buy gold and silver so Harold Siegel is going to profit. I won't profit one single penny whether you own gold and silver or not. But the fact is, as a person who cares about my listening audience, who's been with me for all this time and cares about my friends in Canada and all over the world that watch our shows, I want you to want you to make the right move, and the right move is to own alternative assets, hard assets, gold, silver, and diamonds.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number to speak with Harold, personally and privately, 1-800-432-1022. Harold's auction site is hsfineauctions.com. And Harold, we will be having some auctions coming up in October. When we know the dates, we will definitely let you know. Now is a time for hard assets in your portfolio, diamonds, gold, and silver. Get our free weekly newsletter. If you're not getting our newsletter, the World Financial Report on Radio, then you're not getting the official report that goes along with our show, the companion. You're not seeing the stories that Harold and I are reading on a weekly and daily basis. If you're getting another newsletter, you're not getting our official newsletter. Switch over by connecting with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. We'll be happy to send it out to you via email free of charge every week. Our radio show runs on your favorite radio stations, including 630 CHED in Edmonton, Sunday afternoons at 3. We have a podcast through iTunes. Type in the World Financial Report on radio. You'll find us there. You can subscribe to the podcast. We're portable. We go on any portable device that you have that connects with iTunes. And we have two websites, HESradio.com, rarecoloreddiamonds.com. The shows are there streaming and archived. We're there for you 24/7, 365 to make sure that the money you earn, you work very hard for that money. Many Albertans, many people here in Edmonton working 10, 12, 14, 16 hours a day, busting their backside to get ahead. When you work that hard, you want to make sure that your money is obviously protected and you're profiting at the same time. That's why we recommend hard assets through rarecoloreddiamonds.com and Harold's telephone number 1-800-432-1022. Eric Sprott was interviewed, and he is with Sprott Asset Management out of Toronto. He said this week, get your money out of the banks and into something tangible. He was asked the question, where are you putting your own money right now? Well, I recently bought some gold and silver here in Canada. I probably have 70 to 80% of my portfolio in precious metals right now, and I believe that's the right amount to have. Time will tell whether I'm right or not. Sprott stands for precious metals in a great way. A large part of the value of his company depends on precious metals, and I'm totally committed to that. Much as I find it unsettling what gold and silver prices do on a day-to-day basis, I'm absolutely confident that precious metals will prove the right choice in the longer term. He said, he was asked a question, what's your current outlook for gold? And his response was, the most important factor now is the physical shortages of gold. The declining amount of gold in Shanghai storage suggests we are getting close. So I expect something to happen in the physical gold markets soon. There are lots of people who are willing to support the Fed to play along with it, but of course, they are all looking at the exits if the game changes. I really don't think there are many people who sincerely believe there is some strong recovery or that there is some plan that's going to solve the financial crisis. The central banks continue to pile on debt without delivering results. I think that most people understand that. We're seeing stocks go higher while volumes are going down. Well, when you hit new records on the S&P, the Dow, and the NASDAQ, you're supposed to be seeing higher volume, not lower volume. That doesn't seem to make sense. When people finally decide they want to buy gold, there probably won't be any gold. I'm happy to own it, and I'm happy to keep buying it. We have an interview as well in our newsletter. Get our free weekly newsletter from Harold. We'll send it out to you via email every week, rarecoloreddiamonds.com. Connect with Harold there and get our newsletter there, or 1-800-432-1022. David Morgan was interviewed by Greg Hunter. Greg Hunter, formerly of CNN. A run to silver and gold, unlike anything in the history of mankind, is coming, according to David Morgan. He says, forget about the manipulated price suppression of the yellow and white metals. It's only a matter of time before the debt and derivative markets crash, catapulting precious metals prices exponentially higher. Morgan says, the biggest problem that exists in the debt markets, is where the problem is. When the problem blows up, there's going to be a run to gold unlike anything in the history of mankind. The spillover into silver will be phenomenal as well, because once the debt markets start down, everyone that understands what's going on, which will be very few, will be running to gold. They will try to get gold in any form that they can. And again, a huge spillover into the silver market as a result. All of a sudden, even at the retail level and at the wholesale level or commercial level or the futures market or bar, it's over. A big ETF type or silver holding company will call up and say, I want to buy 50 million of silver or 150 million or 200 million, which is peanuts compared to the bond market. The answer is going to be, we don't have it. When that happens, it's over. This is a very interesting article, Harold, and I really encourage people to read this interview with Greg Hunter and David Morgan, all about the silver market. And David Morgan is predicting that we will see by the end of the year, we'll see $20 silver again and $1,300 gold. And obviously, in the meantime, for those that are starting positions or want to add to positions, now is the time to take a look at it.
You bet, Randy. Again, we're going to get a lot of volatility in the market. And again, when gold does start to run, it's important to understand the futures markets and how it works type of thing with short positions and long positions. Right now, you have a lot of investors that are shorting gold thinking that it's a sure bet that gold is going to go lower, so they're shorting it to profit on it. But the fact is that on a day like today, where gold was down $8 or $9 or $10 in the morning, it's now up 5 or 6. In actual fact, the Dow is now down 200 points as we speak, and so is the TSX. You know, the fact is that all they have to do is catch these traders going the wrong way like they are right now, and all of a sudden they have to scramble to buy back these positions. Well, obviously when you're short and you anticipate the market going lower, and then you go and buy back these positions in massive quantities, it's going to make the market skyrocket in a very thin market. So again, I've experienced this before. I'm very comfortable with where we are. I have no sleepless nights because, again, I've said for the 15 years that we've been doing this show to buy physical gold and silver and to own it outright. Don't leverage it. Don't buy futures contracts. Don't buy options unless you're a speculator. Don't leverage your goods because you'll end up losing it as opposed to owning it for the right reason, which is a hedge against all the things that are coming our way. Currency devaluation and inflation, there is no doubt in the world that we are going to get those situations. There's no doubt we have to. What they're doing is holding off as long as they can by doing certain things to the market, but they can't do it forever. And the fact is that interest rates are eventually going to have to go up. Otherwise, we'll be dealing with hyperinflation, and that alone could bring gold into the $5,000 to $10,000. You heard me right, $5,000 to $10,000 level. So there are definitely situations out there that will make gold and silver run, and we're very close to that happening now. The other thing is that supply and demand, as Rick Rule and Randy just spoke about. You know, the fact is that when the run comes in gold again and they want that gold, it's not going to be there. Because one other thing that's extremely important is that with this downturn in gold and silver, the prices are so low that the mines are not profitable anymore. And they're not going to continue to produce gold at a loss. So if they're producing gold and they're losing money on every single ounce, and the same thing with silver, they're going to close the mines down and then see what's going to happen. And then it takes, you know, a long time to reopen the mines again. So that's the other situation that is going to aid in the fact that there is going to be a shortage in gold and silver, because if the prices don't go higher soon, these mines are going to close down, and then watch and see what happens to gold and silver. You'll see a spike like you've never seen in a market before, and all the shorts are going to get hammered on this trade. So again, own your physical gold and silver, take it home with you, store it, put it in a safe place, and use it as a hedge against what's coming. And there is no doubt that we are going to see substantially higher metals prices, diamond prices, art prices. It's just a fabulous time to be in the alternative asset market.
Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. We're taping our show on September 25th, 2014. Joining us via the telephone, our financial and diamond expert, Harold Siegel. Our time right now is 9:07 Mountain in the morning on a Thursday. Connect with us via rarecoloreddiamonds.com. Also, speak personally and privately with Harold about investing in hard assets, diamonds, gold, and silver at 1-800-432-1022. 1-800-432-1022. Harold's website for auctions, hsfineauctions.com. heralddiamond.com, and we'll have auctions coming up later on this fall. Our show is archived on Herald's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. The shows are there, podcasted, and you type in The World Financial Report on radio, and you'll find us on iTunes. Subscribe to the podcast. We're portable. We go anywhere you do. And the two shows, obviously our show, is on Herald's websites, HESradio.com and rarecoloreddiamonds.com. Those are obviously two websites where the shows are always streaming. So we have you covered. If you ever miss a radio show, we are there for you. And definitely get our free weekly newsletter from Herald. Our featured diamond this week, and we have an absolutely stunning featured diamond from rarecoloreddiamonds.com. Go there right now and click on Featured Diamond of the Week. It is an extremely rare, one-of-a-kind necklace set with fancy pink argyles and a 1+ carat pear-cut fancy intense green diamond. It is absolutely gorgeous. We have a picture of it in our newsletter, but as well, we have video of it on Herald's website, rarecoloreddiamonds.com. Go and take a look at the website, click on Featured Diamond of the Week, and you're going to see just one of the most incredible necklaces, the set that you will ever see in your life. You walk in a room with that around your neck, and obviously, needless to say, Harold, you will get some attention.
You better believe it. You should. The fact is that green diamonds are amongst the rarest diamonds in the world. A diamond will turn green when there's uranium in the ground, believe it or not. So the fact is green diamonds are ridiculously rare. This one happens to be fancy intense green, and it's over a carat. It's just absolutely a beautiful diamond, extremely rare, and one of the best investments you could buy, because these diamonds are so rare, you'll very rarely ever see a green diamond, and the prices on them can absolutely skyrocket. You know, the thing about green diamonds that's very, very interesting is that when they come out of the ground as a rough diamond, they have like a black film over that. I guess it's from, the uranium. So for many, many, many years, people didn't know, the miners didn't know, they thought they were black diamonds. And black diamonds are not overly valuable. In fact, they're the least valuable of colored diamonds. But the fact is that if you peel back the skin on a green diamond, which is that black film, that's where the green is. So basically, for years and years, the cutters that didn't know and the miners that didn't know, they sold them as black diamonds. So the thing is about a green diamond, they're so rare that when the odd time that one does come out of the market, that one comes out of the mine, it's got to be brought directly to GIA, to the Gemological Institute of America in New York, where they will only verify this diamond as a green diamond if it goes through all the different stages. So the cutter or the owner of that diamond, while it's still rough, mean uncut and unpolished, must take it to GIA for them to certify for them to see it in its rough state. And then it's got to go back to GIA 3 or 4 times during the cutting and polishing process for them to be able to determine that that is an actual green diamond. That's how rare green diamonds are. And the fact is that once they determine that it is a green diamond, then they're going to issue it a GIA report. If somebody was not to go through that procedure, they would end up either not getting a GIA report or it coming back as undeterminable. And if a diamond comes back as undeterminable, you might as well just throw it away, because a $2 or $3 or $4 million diamond could be totally worthless if you don't do the right process. That's why people have asked me over time that if I'm concerned at all about diamonds being made in laboratories, because they're making perfect diamonds in laboratories. They look beautiful. The colors are great. The clarities are fantastic. They can be internally flawless. You could get a laboratory to make you a 5-carat vivid blue diamond. Now, we know that a 5-carat vivid blue diamond that's natural is worth about $10 million. However, a laboratory may sell that for a few $1,000s. So the fact is that how would anybody tell the difference between a perfect diamond that's made in a laboratory versus a diamond that comes out of the mines, as nature's art type of thing. Understand the GIA, the Gemological Institute of America, out of New York, is a nonprofit organization that grades diamonds. That's what they do for a living. They grade diamonds. That's their major function. So the fact is that they're not stupid. If a layman was to walk into GIA in New York with a 5-carat diamond that's blue and vivid and flawless and said, I want to get this graded and get a GIA report, first of all, GIA would look at this person and say, who are you? Where did you get this diamond? What mine did it come from? And who cut it? And if you can't answer those questions, they're going to show you the door, because they know who the cutters are. There's only a handful of top cutters in the world. So the fact is that they know there's very few vivid blue, perfect diamonds available in the world. And if somebody walks in and cannot answer where that diamond was mined from, where it came from, who cut it and polished and all that, they're going to show them the door, and that diamond will never, ever be graded. So the fear that some people have that diamonds can be created in a laboratory and it will bring down the price of natural diamonds, that will never ever happen. In actual fact, what it does is it makes the natural diamonds even that much more valuable, because realizing that these are diamonds that come from nature, they come from the ground. That's what diamonds are supposed to be. They're they're compressed carbon, heated, that are hundreds of miles below the Earth's surface, and they come up through volcanic eruption, and then they come up as rough diamonds. They're mined. They're sold to cutters who cut and polish the diamond. Then they're sent to GIA to be graded, and then they're put on the marketplace. And then, my company, we really started the investment business, because the diamond business is primarily mine diamonds, mostly white, cut and polish them, put them in jewelry stores, and that's what the diamond market is. My business is the investment aspect of it. There are certain diamonds that are very, very rare. They don't have to be multi-million-dollar diamonds. In fact, there's a lot of diamonds that are under 100,000 that increase by 15 or 20% a year and never decline in value because there's so few of them. So the fact is that, to own a diamond, to own a true natural colored diamond, you're owning something that is extremely rare and extremely beautiful and extremely valuable. And when we talk about assets that hold their value, that never decline in value, and that can make you a lot of money over the longer term, that's exactly what we're talking about, these magnificent greens and blues and pinks and yellows that are phenomenal assets. We bring you auction results from some of the major auction houses in the world that sell diamonds, and a lot of times we focus on the multi-million-dollar blues and pinks and reds and greens, but the fact is, if you study these auction results, the diamonds that go up the most percentage-wise are the lesser expensive diamonds. The yellow flawlesses that are in the 20 or 30,000 range that can go to 75,000 over 10 years. A pink diamond that's a half a carat from the Argyle mine in Australia, that mine's going to close in 6 years. The price of those diamonds can go up 1,000%. You buy a $100,000 pink Argyle, you'll be a millionaire within 10 years. And the fact is, if you take that same $100,000 and put it in the stock market, you're probably going to lose most of it. So the fact is that every market has its benefits, and there are certain benefits that are tremendous in the alternative asset market. When I talk about alternative assets, I'm talking about assets that are not stock, bond, and real estate related. We're talking about alternative assets that you own, that you enjoy, that you hold in your hand, that you marvel, that you show your friends, that you put on your wife's finger around her neck and let her enjoy it, and then give it back to us to sell it. And the type of assets I'm talking about are rare colored diamonds, Monets and Renoirs, and these type of assets that, again, anybody who sees them is in awe of their beauty, but the fact is they're phenomenal investments. Through a tremendous contact of mine, a client of mine that bought a very, very expensive diamond, and we've done a lot of business together, she was a major collector and turned us on to some of her art. And at this particular point, we have a Renoir that is in a private collection that has never been on the market, and the price of these paintings, there's only one of them, they never ever decline in value. They go up ridiculously in value. So these are the type of alternative assets that we're talking about. Clients that buy diamonds, buy art, buy coins, buy those type of assets. I'm looking at a classic car for next year, a 56 Chevy truck. They go up tremendously in value. I remember as a kid, driving my first car that cost me $5,000. That same car today is over $100,000. So that's the benefit of owning alternative assets. The type of assets that don't trade on exchanges, that aren't volatile, that you put away for the longer term, or you may even pass down from generation to generation. But in the times that we're in right now, as dangerous as all the markets are and everything that's going on, there's not a better investment than a diamond. A rare colored diamond, a yellow flawless, will go up by 15% a year unless you buy one that's over 5 carats. You get one that's over 5 or 10 carats, it's going to double in 2 or 3 years. The Argyle pink diamonds, the Argyle tender's coming up. The fact is, it's the biggest diamond event of the year. Argyle, for those of you that don't know, is a mine in Western Australia that produces 95% of the pink diamonds and is getting ready to close. This is the most unbelievable situation that we've had in the diamond business to make a fortune, because this will never, ever happen again. There will never be another mine that produces 95% of a given diamond. And that mine is going to close by 2020, is already starting to show signs of fatigue. But basically, if you own an Argyle pink diamond and that mine closes in 6 years, you hold on to that diamond for 10 years till there's no more pink diamonds. Again, a $50,000 pink could be $400,000 or $500,000 to you. You'll see an asset that will never decline in value because there will not be any more pink diamonds. So, Randy, this is just an unbelievable time with all the geopolitical situations, with the volatility in the markets around the world, with Europe being in a recession, with the U.S. going at it with ISIS and all these threats and the threats to the airlines and all this. You need to own assets that are not affected by the everyday marketplace. You need to own assets that are put away, that are invisible. Gold has been confiscated in the past. It's been confiscated during the Roosevelt years. There's talk about that again. The U.S. government has made inroads to find out who owns physical gold in the United States, and they say it's for tax reasons. Other people say they could confiscate it. If there's not enough gold and the government gets in enough trouble, they can do anything they want. But nobody knows you own a diamond, and diamonds do better than any investment over the longer term because they're not volatile and they're so rare. So, Randy, I think it's the best investment out there. I love the gold and silver market. It trades on exchanges. I think gold's going to over 5,000. But in the diamond market, it's safe, it's beautiful, and over the next 10 years, we'll make more money for our clients in diamonds than anything that we've ever done in the past.
And one showstopper of an investment that we have is our featured diamond of the week. We had We had an outstanding diamond last week. It was a diamond ring. And this week, we've taken it to yet another level. The featured diamond, go to rarecoloreddiamonds.com, click on Featured Diamond of the Week. Extremely rare, one-of-a-kind necklace set with a fancy pink argyle. So it has the fancy pink argyles and a 1+ carat pear-cut fancy intense green diamond. I love the green diamonds. I love the pink diamonds. We have a picture of it in our newsletter, but even better, go to the website, rarecoloreddiamonds.com right now and see video of it. It is absolutely gorgeous. Now, Harold was talking about auctions. An 8.41 carat pink diamond, and they're saying it may be worth $15.4 million, is set to be auctioned off here in a few weeks. Sotheby's Hong Kong is selling this 8.41 carat pear-shaped, internally flawless, fancy, vivid, purple-pink diamond. As part of its magnificent jewels and jadeite auction sale, it's the autumn auction sale for 2014, October the 7th at the Hong Kong Convention and Exhibition Center. The gem is estimated to be worth approximately, the estimate on it, 12.8 to 15.4. And this diamond is beautiful. We will have auction results for you in a couple of weeks' time when this diamond does sell. Now, if you're wondering about diamonds, Harold has been out there in the forefront not only of starting rarecoloreddiamonds.com and HES, obviously this is, to me, the piece de resistance, which is hsfineauctions.com, the auction website to sell diamonds and gold and silver and things of that nature. We obviously are very excited about that. We have auctions coming up in October, November. We'll tell you more about them as we get closer. But Harold has been interviewed recently on Fox Business News, and he was interviewed by Deirdre Bolton. And we have video of that. If you'd like to see Harold's interview, we'll send it to you. As well, in the past, when Deirdre Bolton was with Bloomberg, we have an interview with her and Harold, and Carol Masser interviewed Harold on Bloomberg Television as well. We have 2 Bloomberg Television interviews, and we have the interview on Fox Business. Also, this is the one I would really encourage you to watch. If you really want to get to know the man, Harold Siegel, watch the interview that Jerry Bovino did, on Aspen. Harold obviously spending some time in Aspen, working out of there, working holiday in the summer, and primarily work, though. And he interviewed Harold. This is a must-see interview. We can send that out to you as well. But Harold, you have been very, very busy this summer being interviewed by Fox Business News, Jerry Bovino, Bloomberg in the past. You're obviously becoming world-renowned when it comes to rare colored diamonds. The website, hsfineauctions.com, being an expert on rare colored diamonds. And you were the one who brought this to us, it's hard to believe, back in 2005. Here we are, 9 years later. In August of 2005, you brought this to us 9 years later. Here you are, one of the preeminent spokespersons for rare colored diamonds, and we couldn't be more excited about the results that we've seen in the last 9 years and what's to come in the years ahead.
You bet, Randy. First of all, thank you very much. I love this business. And again, I look at it from the investment aspect of it, which really never existed before. So the fact is that my mind works that way. I've been in the investment business for 35 years, and when I did studies on diamonds, I found, that they do increase in value, but what they were lacking and what wasn't present was a secondary market to resell them. You have the commodity exchanges to resell, corn, wheat, and soybeans, gold, silver, oil, all those things. You have exchanges to sell stocks, but there was never a secondary market to resell diamonds, and that's what I brought to the market. It took me a long time to build it, but we have the premier business in all of diamonds. We're changing the diamond business. That's the reason we've been on Bloomberg and Fox and all these other interviews, is because it's never existed before. You've got to understand who the players are in the diamond business, and understand that these people are not financial people and not marketing people. They're the Hasidic Jews that really control the diamond business, and the diamond business is very simple. You pull diamonds out of the mine, you sell them to a cutter and polisher. They cut and polish the diamonds, they sell them to jewelers, they put them into jewelry, and that's the diamond business. But there's another aspect to it. It's the investment aspect of it, and it all came together when we built H. Siegel Fine Auctions. So, again, it's really gaining a lot of popularity. It's a virtual auction business where people attend our live auctions from the comfort of their own home from anywhere in the world. At our last auction, we had people attending from China, Kuala Lumpur, Australia, Europe, Canada, and the United States, and they were sitting in their home participating. The thing that I'm really proud of is that it became a very viable secondary market to raise money for charity. And the fact is that once we held our auction for the Susan G. Komen Breast Cancer Charity, and it was so successful, we have recently been contacted by the Heart Association, by the Girl Scouts of America, one of the largest charities in the world, and we're doing an auction for them in conjunction with them on March the 19th. We've been approached by 5 different charities that all want to do auctions using diamonds and using our business. So that's what's so exciting. I'm just thrilled that something that I built has had this type of reaction and will probably be one of the most important contributions to the diamond business. I'm very heavy into diamonds. Most of my money is invested in diamonds because it's my business and it's my comfort level. I just went partners in a 34-carat pink diamond. 34-carat pink. If you can imagine that the diamond that Randy just described is going to sell in the 15 million range, you can imagine what my 34-carat pink diamond is worth. That's something that I will hold and then eventually sell on my auction, H. Siegel Fine Auctions. We are really going to build that business. It will be a worldwide business, and I'm very, very proud of it. But again, for my clients, we built this website so my clients could resell their diamonds. Nobody else has this. If you're buying diamonds from other companies, the fact is that you're going to have to depend on them to somehow possibly try to sell your diamonds for you, and good luck with that, because they don't have a secondary market. And it's not that I'm being a mean guy saying that I'm not going to sell somebody else's diamonds. I vouch for every diamond that is sold on my website. I guarantee every piece that is sold. And if I haven't sold it and visually seen that diamond myself, I'm not comfortable recommending it. There's been a lot of companies that have popped up over the last few years to try to copy, but the fact is that they can sell you a diamond, but they can never resell it for you, and that's the most important thing. If it's not, it can't be a good investment if it can't be resold. So again, our auction business, H. Siegel Fine Auctions, is going to be one of the largest businesses in the diamond business, and it caters strictly, to that aspect, for our clients to have a secondary market to resell their pieces. The other thing is, don't buy a diamond today and expect to sell it in 2 or 3 years from now and make a big profit on it, because you're not going to do that. The fact is that diamonds are a longer-term investment, like a retirement savings plan. You put it away for 10 or 20 or 30 years. I've got a friend that inherited a 5-carat pink diamond from her grandmother. Her grandmother bought the diamond 50 years ago for $50,000, and the diamond's worth $4 to $5 million today. 50 years ago, she bought it for $50,000. Today, it's worth $4 to $5 million. Now, the fact is that if you buy a diamond today, let's say you buy a 10-carat yellow flawless from us, and you put that diamond away and you put it in your portfolio and you put it away and you hand it down to your kids or to your grandkids, when they go to sell that diamond, you're talking about returns like you've never, ever seen before. That's what's so exciting about the diamond market. It's beautiful. It's rare. We built a secondary market for it. We want you to hold these diamonds for the next 10 years. We want our clients to make a tremendous amount of money, and the worse the world economy gets, the more important these diamonds become. And again, they're portable private wealth. You can travel with them. You can own them. Nobody knows. The government doesn't know. They can't confiscate. It's that type of asset. We're recommending yellow flawless diamonds starting at $20,000. They go up by 15% a year. We're recommending Argyle pinks. They are probably the best investment diamonds you could buy at this point, because the mine is going to close down. They started about $50,000. The funny thing is, last year we were talking about Argyle pinks. They were starting in the $20,000 range. Now they're in the $50,000 range. Next year you're not going to be able to buy an Argyle for under $100. So get on that bandwagon. That's the best investment diamond you could buy, and they're in very limited supply. The mine only produces about 200 carats a year, and that's dwindling, and soon that mine will close. You're talking about a market that if you don't invest in it this time, you will never get a chance to do this again, and it will be something that you will remember and regret for the rest of your life. This is an opportunity to own the most concentrated form of wealth in the world today, a magnificent pink diamond from the Argyle mine, all the papers, GIA certified, everything, and soon you will not be able to get those diamonds anymore. We anticipate the prices will go up 1,000% over the next 10 years. So that's 100% a year. I don't know of a better investment than that, Randy.
5 compelling reasons to invest in diamonds: privacy, portability, estate planning, it's something you can pass down from generation to generation, price stability, and good long-term growth. Take a look at our featured diamond of the week. It is an extremely rare, one-of-a-kind necklace set with fancy pink argyles and a 1+ carat pear-cut fancy intense green diamond. Go to rarecolordiamonds.com right now. Click on Featured Diamond of the Week. You will see video of this necklace. It is gorgeous. Absolutely stunning. If you get our free weekly newsletter, you can see a picture of the newsletter in the picture of the diamond in the newsletter. It is absolutely stunning as a picture or a video. Encourage you to go to rarecolordiamonds.com and take a look at our featured diamond of the week. Harold, with 30 seconds left, geopolitically, you look at what's happening in the world: North Korea, China, Japan, Iran, Iraq, Syria, Israel and Hamas. It's really Afghanistan and ISIS, and it's just a crazy time.
It certainly is, Randy. It's a frightening time. It just is, and you have to do the right thing at this point here. You cannot risk everything that you've worked so hard for just because you don't know, exactly what's happening. It's the time to be conservative right now, not take unnecessary risks, and that's exactly what we're saying. These markets will come our way. There's no doubt about it. I'm a firm believer in alternative assets, gold, silver, diamonds, art. That's where all the money is going to be made, and they're safe investments.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.